Let's get ready to rumble.
T4Q, T4Q, T4Q.
Welcome back to the fourth quarter. I think that was the Let's Get Ready to Rumble was actually insane. I thought that was like identical. It sounded identical.
I would give it it's like 90%, 95% accuracy to Bruce Buffer.
95%.
95 is an A. You got to
All right.
take it.
All right.
You got to take
we
it.
back in school, but it ain't no Professor Paramanu. Ladies and gentlemen, we are in a very special location for a special episode. We are in Novig's headquarters on 5th Avenue here in New York City. Novig is our exclusive prediction markets partner, and we have a special episode because we're sitting down with the CEO of Novig, Jacob Fortinsky, and the SVP of Growth, Nikhil Panu, later in this episode. We're going to do a quick run of the show telling you that we have, the major moves and business deals that are done on the team and league side. Then we'll get straight into the interview with Jacob and then Nikhil, and then we're done. It's a very special, quick, fast episode, punchy, and it should be very entertaining. Before we move on, make sure to hit the like button, comment, subscribe if you haven't already. Our shorts are mooning, and they're driving a lot of subscribers, but
they are mooning.
They need to watch the long form and get tapped in.
I completely agree. And fourthquarter.co. If you want to get super smart in the space, weekly newsletter, thefourthquarter.co. That is a spot for all of our deep dives on the sports business space.
Welcome to Money Moves, where we cover all of the business moves that happen surrounding professional sports teams and just sports teams and leagues in general. First up, we have a Tequila billionaire that has paid one of the richest prices ever for a stake in an MLS team. Juan Domingo Beckman, the 11th generation CEO of Becle, the company behind Jose Cuervo, 1800, and a few other iconic brands, has joined two other investors to purchase a 6% stake of the LAFC MLS team for a $1.25 billion valuation. Brooklyn Nets owner Joe Tsai and Fanatics Collectibles CEO Mike Mahan both sold their stakes, so there was a new group coming in, a small group leaving. Beckman and James Cha is one of the other investors of Spring Oak Partners, now join a cap table of 27 deep, meaning that there's 27 other investors that have invested in this team on the capitalization table. So more on Becle. What exactly is it? Beckman inherited nearly a 51% stake of Becle earlier this year. His sister, Karen Beckman, owns an additional 36%. So the family, both of them together, own 85% of the company. And this is iconic because the company has been run by the Cuervo and Beckman families since its founding in 1758.
Wow.
11 generations down. So 1758, and it generates approximately $2.3 billion in revenue. It's
Wait, so you're telling me society has been doing tequila shot with lime and salt for 300 plus years?
I'm sure that,
around 300 years.
I'm sure that specific drink has moderated and I guess modified over time, but it's crazy that they've been manufacturing that stuff for 300 plus years.
I mean, 11th generation
is crazy. So here's why I think this is really fascinating. So Becle trades on the Mexican Stock Exchange. Shout out producer Pablo with the market cap of $3.2 billion. And Forbes estimates that the immediate family is worth about nearly $2 billion. But the company it's not just a very profitable, very interesting CPG and adult beverage company. They have existing ties to the sports world. So they have 1800, which is Beckel's second best-selling tequila brand, has partnered with LAFC since 2021. So he isn't new to this.
He's already been associated with the brand for a long time.
100%. Yeah. And Jose Cuervo sponsors NASCAR and the UFC. Maestro Dobel is the PGA Tour's official tequila partner. Very, very cool stuff. And the valuation context of Sportico put LAFC as the second most valuable MLS team behind Miami's Inter Miami, obviously, where Messi plays.
A legend.
But the question I have for you is, one, I want to hear your general thoughts on this if you have any. But here's the thing. I think tequila money might be coming into sports. We've seen tech money come into sports. And, I'm sure there's more.
Tequila money specifically or just alcohol?
No.
Alcohol?
Listen,
okay.
Tequila money because Alex Earl, obviously now the popping internet influencer, right? She's everywhere. She's doing a bunch of different things.
She's got
when do you think we'll see Alex Earl own a sports team? Because she is if you didn't know, she's the single largest individual investor in a company called Sipmargs, and people just identify her with that company. And Sipmargs is a ready-to-drink canned margarita company that primarily markets to Gen Z and, the younger crowd. So I'm curious, do you think we'll see Alex Earl owning a sports team?
So
anytime soon?
we're comparing Becle, 11th generation from 1760 to Alex Earl's Sitmarg, which just
Old money versus new money.
old
Come
money
on now.
versus. I mean, look, I could see Sitmarg being a huge company. Don't get me wrong. I've had it before. Don't ask me where. Don't ask me when. Don't ask me why. But I've had it before. It's pretty good.
Can't say I've done the same.
I
I don't think I've
don't know.
ever seen it even.
I feel
like
like I've seen
physically.
it once, and it was decent. It was pretty
Okay.
good. And so, look, Alex Earl, she's huge. I could definitely see her, investing in a sports team, but like what sports team? What is she interested in?
Okay, well, so she went to the University of Miami, right? And
Okay.
we're seeing all of these deals that are happening where people are able to invest in collegiate teams. Is there a world where eventually the University of Miami has a commercial arm where they take out outside investors, and Alex Earl might be one of the people that
Okay,
invests in?
that could be interesting. Or, it'd be funny if she somehow, look, she might, nowadays there's like creators like her who have potential to become billionaires, long term. We already see Jake Paul's on that trajectory. She might be on that trajectory. What if she buys a minority stake in the Dolphins?
That's crazy.
That would be crazy.
That would be wild.
Because her ex used to play for the Dolphins. So it'd be kind of crazy if that was the case. I actually do. One thing that I will say is the most fascinating about this story overall is that LAFC specifically is just building a crazy roster of owners and co-owners.
Yeah.
So I was looking into their cap table, and actually very few sports teams do this, where they showcase every single co-owner, but there's like 20 of them on their website. You would never see that for any other sports team. But they literally have an ensemble of PE, tech, now Tequila money, and entertainment. They got Will Ferrell, Magic Johnson. He's on the cap table. They got Mia Hamm.
Another one.
Another one indeed.
Your former boss, Tucker Kane. I think he's also a co-owner.
Shout out
as well.
Tucker. Yeah.
Shout out Tucker. So look, they're building just an all-star cast, and I feel like that's a really interesting way for a sports team, especially in LA, to position themselves. And I think that this team specifically will continually open its doors for future investors, whether they're former players as well, because you have Carlos Vela, who's also part of that team. He was an MVP
legend
for LAFC. So pretty cool that they're just building this massive roster of owners.
As much as I'd like to talk about LAFC and their new Tequila billionaire investor, there's been so many other pieces of news that we need to quickly touch on before we show the folks Jacob Fortinsky. But just a few months ago, people were saying that LIV Golf was dead, and after Saudi Arabia's PIF pulled their funding of $5 billion and missed profits, and now they might be back. CEO Scott O'Neill announced that the league signed a term sheet with an unknown investor for a $250 million check that will fund the league past 2026. So O'Neill said in a media appearance that there were more than a dozen investors looking to be minority owners within the league, and he also wants players to become majority equity investors within the league. So they're playing and they own the body of which they are help propping up. Not too many details have emerged yet. Some people say it's BC Partners as the investor, and specifically their credit arm. They're a London-based investment fund with $40 billion assets under management, spanning strategies in private equity, credit, and real estate. So all things that are very applicable to LIV at hand. So quick timeline, April of 2026, headlines came out that PIF confirms their exit after sinking $5 billion into LIV. A month later, LIV announced they needed $600 million. PIF delivered $200, saying this is what you need to carry out for the rest of the season, and that they need to start fundraising to help fulfill capital needs. And LIV appointed a restructuring veteran, Gene Davis, as chairman, and retained investment bank Ducera Partners to lead the fundraise. Suraj, do you think LIV Golf is back?
Well, I don't think the old LIV Golf is back. Obviously, LIV Golf 2.0, this is the new league that they're trying to build out. I think there's some details that Scott O'Neill, the CEO, has revealed about what he wants to do with this newfound money that they've been able to grab. We'll see if I'm looking forward to the reveal. Maybe it's BC Partners, maybe it's not. But what I am very interested in is that they want to do three different things. One is obviously give majority ownership to the players, which I think emboldens them and also keeps a lot of star players within the ecosystem. Bryson DeChambeau's up for contract renewal, and at the same time, John Rahm, there's been reports that he hasn't been so fond about staying at LIV Golf. But if you give even more ownership and equity to the players, they have more of a reason to stay. The second thing is that they're actually reducing the amount of events from 14 to 10, which I think is strategic because, look, they're burning cash quite significantly, and they've actually had to cancel their Michigan championship, which was reportedly going to be worth like a $40 million production. So they don't have that much capital. Why not shorten it to make it 10 events? I think 5 of it's team-based, 5 of it's, player individual-based. And the last thing, which I think is really strategic, is that they want this to be more of an open system rather than a closed system. So, previously LIV Golf was trying to compete directly with the PGA Tour. If you wanted to play under LIV Golf, you couldn't play under PGA Tour. Now I think they want to open things up where they provide more control over your NIL if you're part of LIV Golf. And if that's the case, if you can participate in both the PGA Tour and LIV Golf, I think that's actually a long-term strategy that will work for them because, look, they've already done the head-to-head before and it didn't work out for them. PGA Tour, obviously, they, went in the lab, they innovated, they brought the championship series, and I feel like, or the signature events, and they did a great job with that. And ultimately, they won in this scenario, but I do think that they can coexist together.
And the last piece of team and league news before we hop into our interview with Jacob Fortinsky is the 2026 NFL season hasn't even started, and headlines just emerged that Disney has sold out all available ad inventory for the 2026-2027 Super Bowl coming this February in 2027. This is the fastest record of ad sales for the Super Bowl that has ever existed. Disney CFO Hugh Johnston broke this news midway through their Q3 earnings call just recently. Total volume commitments are up double digits compared to last year. So unknown what that looks like, but we'll see what that actually means. And here are some numbers that have been public about this. So they're drawing 58 brands across 34 distinct categories, including financial services, candy, personal care, and software. 9 brands are new to the Super Bowl ad slate for the first time. Weeks earlier, advertisers and media buyers had complained that Disney was being too aggressive in pricing, seeking $10 million for a 30-second ad. And Variety reported a significant chunk of this year's deals costing somewhere around $8 million for the 30-second ad slot. So if you do the math, there's about 70 ad slots, pricing it between, 8 million, 9 million. That's roughly $500 to $600 million in ad revenue the Super Bowl is generating. Could be more than that. We'll see when the official numbers are presented, if ever. But I'm curious, what company would you like to see advertise on the Super Bowl for the first time?
Well, first things first, before I answer that question, it's kind of insane that they were able to sell all of their ad inventory 6 months before the Super Bowl even happens.
Before a snap of the
football season even happens. And I think a lot of it does have to do with like ESPN, or it being on ESPN and Disney as the commercial engine. Clearly, I think that ESPN is just a massive platform. And when it comes to bringing attention to the game and accessibility, there's just going to be more viewers.
Last year, NBCU, Universal, sold it in record time, and it was in September. So now it's in August. Next year it might be even in the summer in July.
Yeah,
right?
Maybe it doesn't even matter that it's on ESPN or NBCU. Everyone's just going to watch it. But I have a few takes.
Okay.
One, I think that the first guess that I would have is a company within the blood testing or like collecting biomarking data. Okay. One of those companies. So this has been a huge trend. You have companies like Function Health, Rhythm Health that do blood sampling. You essentially test all of your biomarkers. It's been extremely popularized, and at the same time, they're raising massive amounts of capital. We saw that with Function Health raising $450 million from General Catalyst's Customer Value Fund literally just last week. So they do have some of this capital to spend, and they probably want general brand awareness because, look, everyone knows what Function Health, Superpower, Rhythm Health is in some of these major coastal cities. But now is the time to broadcast the importance of blood testing to the general American that lives in the Midwest or that lives in Kentucky or New Mexico, right? Some of these markets that these blood testing companies haven't actually, infiltrated. And so I think this would be a great brand awareness move. The second is any peptides businesses.
Interesting.
We saw this with Ro. So Ro, they sell GLP-1 through their telehealth platform. They had a commercial with Serena Williams in last year's Super Bowl. Could we see some of these other new peptides companies that maybe they're selling GLP-1s, but maybe as we start to see with federal FDA approvals, there might be more peptides companies that come up that raise significant amount of capital do they just go straight for the kill shot and have a Super Bowl ad? That'd be amazing. And then the last runner-up, or the last thing that I would say is, if the NFL somehow brokers a deal with a prediction market in the next 6 months, there is a possibility that you have some surprise Super Bowl commercial with a prediction market. Because remember, we covered this, that you can't.
How did that
prediction
even
markets
work?
can't advertise.
They sold out all of them. I don't know how many.
It's not possible.
Well, I don't know. I don't know if there's like any loop arounds or something. But look, we'll see. I mean, we were at San Francisco on the ground in Super Bowl earlier this year, and God, that feels so long ago.
Yeah.
Even though it was just a few months ago. And Kalshi was driving around and Polymarket, I'm sure, had some IRL activations, but Kalshi was driving around the city with trucks, digital trucks. So it'll be interesting to see. I personally think we'll see a bunch more AI companies, consumer AI companies. I think 11 Labs will definitely have something this year.
Really? Okay.
My guess. We'll see some, AI, consumer AI use
You'll
cases.
see OpenAI, Anthropic back at
They
it
were
again.
they were in it last year, right? So Ramp obviously was in it last year. So I think there'll be some heavy hitter tech companies. It'll be really interesting to see if Anduril or Palantir have an ad. I don't know why they would do it, but it's very American dynamism, So could be a very cool opportunity to present them. It could be a really interesting.
Just more of like a brand building appeal, like just to the general consumer.
That's what all of this is. This is no way it's attribution, right? And they're actually
there's some level of attribution. There's a reason why Bud Light is having a commercial to Super Bowl,
but it's also
that definitely drives
brand play.
It is. That's true.
Regardless, I think them, maybe Happy Dad from John Shahidi.
Oh, Happy Dad would be
and the Nelk
interesting
Boys.
one.
That could be an interesting one. But
and they have a new pouch now too. It could be like a collective Happy Dad commercial. Who knows?
Who knows? Well, regardless, very interesting stuff. I tried to run through this very quickly, Producer Pablo, but somehow we still didn't get through this section very fast enough. And I hope now that people will be tuning in for what I think this thumbnail will be, which is Jacob and us, and sitting down with the CEO of Novig that's worth $500 million. And without further ado, we have a very special guest coming on. Tune in for this part, and we're sitting down with co-founder and CEO of Novig.
Let's get it.
Jacob Fortinsky, ladies and gentlemen. Suraj, we are in a very special setting for a special episode today. We're in Novig's headquarters here on 5th Ave in New York City.
Yes, our exclusive prediction markets partner. It's exciting.
It's very exciting. Jacob, you can't hear this because we have sound effects going, but we have a very special someone sitting next to us, hailing from Larchmont, New York, by way of Harvard University and Y Combinator, 28-year-old co-founder and CEO of Novig. Like you mentioned, Suraj, T4Q's exclusive prediction markets partner. We're here with the Prince of Prediction Markets,
a legend,
Jacob Fortinsky, ladies and gentlemen.
Thank you. I like the sound of that, Prince of Prediction Markets.
Jacob, we were telling you just off camera, but you guys, we spotlighted you in our third ever newsletter when Novig raised a $6 million seed round post Y Combinator. Can you tell us how Novig started? And, you guys were one of the first companies, one of the very few companies to ever be in sports tech to come out of YC. So a lot of interesting things. Give us the origin story.
Yeah. So the origin story in a nutshell is that Kelechi and I had been obsessed with trading our whole lives. Some of my earliest memories were with my grandfather learning how to pitch stocks to him, what was a buy, what was a sell, then started flipping tickets on StubHub, started betting on politics when I was in high school, started trading Forex and then stocks and then NFTs and basically every asset class I can get my hands on. And then in college, started playing a lot of poker, massive quant trader poker scene at Harvard, MIT, which is really where Kelechi and I got close. And through the poker world, got exposed to sports betting, high stakes, sort of dark pool sports betting, and saw this problem firsthand, which is that everyone was getting limited and banned. It was quite easy to beat the sports books. But once you started winning too much, they basically told you to get lost, and they would limit your account or close it entirely. And to me, that seemed very predatory, outdated, inefficient, and felt like there's a very simple solution, which is to treat sports betting as a real financial market and democratize financialized sports betting, introduce a central limit order book, and basically structure it the same way any other event contract market traded. I was one of the first couple hundred users on Kalshi. I was active on the predecessors to predict to Kalshi and Polymarket, InTrade, and Predict It, and saw that somehow these political betting markets with 1/1,000,000th of the volume of sports were somehow more efficient, more consumer friendly, And so the idea was, why don't we build the NASDAQ of sports betting? And we then applied to YC our senior year of college, raised a pre-seed round from Lux, did YC. They told us, you should try to launch within 6 weeks. We told them it's going to be more like 12 months given the regulatory hoops we'd have to jump through. And through YC, they told us about the experience that Railbird and Kalshi had at the federal level, really getting thwarted by the CFTC in the prior administration. And they basically said, it's probably not going to work for them. Try doing this at the state level. So we decided, let's get regulated as an online sports betting operator at the state level, get the same license that FanDuel and DraftKings had, and tried to pioneer this peer-to-peer exchange model. And quickly realized that the states were never going to let this happen. They really didn't care that much about consumers or innovation. They really just wanted to protect their bottom line and, frankly, milk as much money out of their consumer base as possible. And that's when we pivoted to trying to do this at the state level. I won't go through the entire history of the company, but a lot has changed since we went through YC. We were, I think, one of the first, maybe aside from Railbird, the first in this category to go through YC. And, I think something I learned early on was that the people over-index on their own experience. Like you're talking to investors, like brilliant investors like Courtside, they'd seen so many people try to do this and fail. And, they had this sort of defeatist mentality that this would not really be feasible. And so, something we learned early on is that there's value to learn, to learning from the mistakes of others. Easier, it's better to learn from others' mistakes than your own. But with that said, there's value in having blinders on and just locking in and trying to build the best product. And I think that's what we committed to doing. The first iteration of the company didn't go that well when we launched in the OSB framework. We actually had one of our main investors basically tell us, you're at the end of the rope. We're not going to give you any more money. Pack it up and we'll invest in your next company. And we heard this from a couple of, of our main investors. And, failure was never an option. I think our backs were up against the wall. We had, I think, 3 weeks of runway. And I just committed to myself that this is going to be a platform that does $1 trillion of volume, that we would be the premier sports trading platform globally, and saw a really clear path to getting there. And so I'm proud of this moment that we're now here, finally designated as a federally regulated prediction market, the fastest in U.S. history, which I think is a testament to the strength of the team and the product. But more than anything, I think it's a testament to the determination of our team. So anyway, that's sort of Novig in a nutshell.
That's wild hearing you say that you guys were at the last 3 week stretch, and then we've covered the $6 million seed, a little over 6. Then you guys had a $18 million Series A roughly last year.
Yeah.
And
so between that, there was a what we called a seed extension.
Sure.
And I've actually never told this story, but basically our pre-seed and seed investor was Lux Capital. And I'm not necessarily blaming them. I understand why they decided they didn't want to give us another lifeline, but they basically told us to pack it up. And we then had to go out, desperately try to find other capital with basically no leverage. And thankfully, we were able to close a round from NFX. They saw the determination, the grit, the vision, and they gave us $3 million when we were really at our lowest point. And from that point, that was, I think, we raised at 15 million valuation. It's not something I've ever disclosed, but that was, then 6 months later, not even 6 months later, like maybe 5 months later, we raised the Series A. Then another, few months after that, we raised the Series B. And it felt like for the first time, we were actually able to prove like who we were without, having to deal with these sort of bullshit state regulators, frankly.
Yeah.
And that's when it really started to click. A lot of the growth just was explosive. It was organic. It was people really saw and gravitated to what we had built. The cleanest UI, the best odds, the most efficient markets, and, a really sports native prediction market feel. And I think that's why we've seen a lot of the growth to date. And that's sort of what we're doubling down on.
Love it.
Yeah.
From I know Series B, $75 million won. That's awesome. Congratulations. That happened earlier this year.
Yeah.
Now you guys are officially a designated prediction market, transitioning from a sweepstakes to a prediction market. And you guys have hit $6 billion, I believe, in cumulative volume.
That number might be outdated, Suraj.
Yeah,
these guys are growing fast.
That's true.
Yeah, I'd have to
18 million on the first day, right?
Yeah.
The market was open. Obviously tremendous growth, and a lot of it does come from the sports trading native experience. Can you tell me a little bit more about that and just like how that differentiates from, I've seen a lot of like complaints online or just, hey, I, grew playing sport or trading on or, making bets on sports books. And then now the prediction markets, while there's a lot of volume there, doesn't feel like it's truly native for the sports trader. What does that look like on Novig's platform?
Yeah, that's a great question. I think like a very reductive view is that we're combining the best elements of a Kalshi and a DraftKings. I think in practice, what that really means is that we have a product that is accessible and familiar to existing sports bettors while giving them elements of the trader experience that they've had when trading other types of assets. I think to take a step back, one of the real tailwinds in this space is not, let me reset. I think a lot of the growth in this space is not just regulatory unlock. I think sometimes people who are cynical would say, oh, this is just because it's now legal at the federal level. I think that's, really a small sliver of the story. What's really happening is that sports bettors, sports fans are increasingly viewing these markets as a financial product. They're interacting with these markets the same way that people interact with equities markets. People trade Tesla options or Dogecoin. They want something that is, the average education of the sports fan, of the sports trader or bettor, has grown tremendously over the last couple of years. People understand concepts like arbitrage and plus EV, and they know how to line shop. And, I think we really benefit from that tailwind. We're building for the next generation of sports traders that want a product that's really on par with other types of consumer fintech platforms that they experience in other categories. We're also proud to be the largest Gen Z founded company in this space. And so, I think that's a component of it. So, I think when people come to Novig, they're often comparing us either against the legacy sports books or against other prediction markets. And so I think in some ways we have a different pitch depending on what our comp is. Compared to other prediction markets, I think we have a more sports native feel. We really believe that a product and brand that is purpose built for sports will win this category. Over 80% of volume in the category is on sports. And I think that's really by demand. It's not by design. Some of our competitors' platforms, I think, are uncomfortable with the fact that sports are the overwhelming majority of volume on their platform. They even publicly say that they want sports to be, a quarter of the volume, and sports is growing faster than non-sports. So it's sort of going in the opposite direction. And I think we're very proud to be a company built for and by sports traders. And, I think there are certain things that we've built, like a points program where you get rewarded for trading on the platform, for interacting with certain types of markets. I think we have the most intuitive parlay experience for people who have come from the sports betting world. And then compared to other sports betting platforms, we have, I think, the cleanest order book interface, the easiest way to sort of upskill your knowledge of sports markets. So we're trying to really build for every segment of the sports trading audience. I think if anything, that's our main flaw in some ways, is like we're not, we are laser focused on building the best sports product, but we want to appeal to the most recreational user who is coming from, a prize picks background where they have no knowledge of markets or prediction markets. And, we sometimes say like we want Novig to be the best platform, even if you don't even know what the term prediction market means. But then on the other hand, we want to compete against the people who are trading on pro terminals and that segment of the audience as well. So anyway, that's, I think, our product philosophy in a nutshell. We have to basically compete and crush all of our competitors at every layer of the tech, from trading to odds to efficiency to user interface to payment rails to rewards, loyalty, all of that. There's not a, I think I'll be happy when there isn't a single thing that any of our competitors do better than us in any single regard. And I don't think we're quite there yet.
Jacob, zooming out to the macro prediction markets landscape, one thing I think is super interesting, and Suraj and I were talking about this last night when we were prepping for this, was Kalshi and Polymarket, it seems that, and kind of the legacy sports books have been in the fire and like the zeitgeist of combativeness that's happening with legislation in the media and stuff. And it seems like Novig has strategically, whether that's purposefully or not, like flown under the radar and kind of stayed out of that commotion and the negative commotion, I should say. And a lot of that is because, I'm assuming a lot of that is because Novig has played very close to the books in terms of how lawmakers and legislative bills are being passed, and like how specifically around how the platform is 21 plus, and how some other platforms might seem predatory in the fact that they've been open to and allowing 18 plus. So like, tell me more about how you're thinking about the platform. There's been a new responsible gaming framework that you guys have been put out. So like, walk me through.
Totally. Yeah. I think there are a couple things you touched upon. One is that, I think sports is, and this might be counterintuitive, but sports is cleaner than a lot of the other stuff. Like the average American supports the legalization of sports trading or sports betting, but is uncomfortable with a lot of the other markets that are ripe for insider trading or outcome manipulation or have national security risk. Things like mention markets, or whether sex toys will be thrown on a WNBA court, that are crude and easily, susceptible to manipulation. And so I think we believe these are legitimate. This is a legitimate financial asset class. We are a legitimate financial exchange, and we want to treat ourselves in this category with the level of seriousness that it demands. And so I think we've tried to stay away from some of the more cavalier types of marketing, I'd say. With that said, I do think we've been a little bit under the radar while operating the sweepstakes category. We've been sort of waiting until we launched our national prediction market to be louder, more aggressive. Sure. We want to be fighting for this category. I honestly think Kalshi's done a good job at fighting these fights, but there have been some areas where I think they haven't done the best job, particularly when it comes to sports, that I think have a better narrative to tell. One, because we'd been operated at the state level. I saw firsthand at how incompetent and backwards their approach was at the state level. So we just announced that we're suing a handful of states that are infringing on the rights of federally regulated prediction markets. And so we don't want to just let others, whether that's Robinhood or Kalshi or Coinbase or whomever, fight our battles. We want to fight them ourselves.
That's awesome.
And we will be louder when it comes to marketing as well. But yeah, I do believe that staying away from certain categories makes us a little bit safer. And to your point, we really want to be leaders on responsible trading, on market surveillance, on integrity, on doing things the right way. As we grow and scale, it is important that there are types of users, for example, that are susceptible to misbehavior and
Sure.
Improper financial behavior, particularly in the 18 to 20-year-old demographic, which is why we've chosen to remain 21 plus. And I think we're the only prediction market to have that age gate. Part of that is also listening to the leagues. That's something that the NCAA and the NBA and the MLB have pushed for. And so we want to be a good steward in this category as well. And I think, whether it's right or not, some of our competitors are viewed as being a little bit too aggressive in growing their platform, at the risk of putting out misinformation or doing things that might get them into some trouble in the long run. So we hold ourselves to an incredibly high standard. We want to be leaders on integrity and trust, and ultimately that's the basis of every market. If you can't trust the platform to do things the right way, it's hard to really build the trust that is necessary to be the largest financial exchange in the world, which is ultimately, our ambition. So, I do believe and it's also, frankly, like the reason why I started this company in the first place was I was like, this space is kind of fucked up. Like it's run by companies that just do icky things. No offense to your former employer, but we felt like there's just a more consumer friendly, more responsible way of building a sports trading company. And, we want to lead by example.
Yeah.
You bring up an interesting point about that, actually. I feel like there's a lot of pressure from sports books now, most of the public ones, where in a recent earnings call, Jason Robbins actually said that prediction markets aren't really peer-to-peer. It's really more peer-to-Wall Street, peer-to-market maker. And you actually had a really sharp response on X about what he was saying. You're saying it's quite silly what he's saying, because if you want $100 in the Knicks to win it all, DraftKings offers $1,200 while someone on an open exchange offers $1,500. You don't care what the counterparty is. You care that you get the $300 more, whether that's Citadel or Joe Schmo. So can you walk us through like just the financial outcomes that comes from sports books and prediction markets, given that I feel like there's like a combative battle in the media, especially given there's earnings, coming up, stock prices are tanking. Just want to get your take on all this.
Yeah. Well, so one is like, these guys are not acting in good faith. Like when they put forward arguments, I think they know that a lot of what they're saying is bullshit, frankly. But just taking them at their word and assuming they're acting in good faith, it is worth responding to the substance of their argument. So one is that I'm a big believer that like the Bezos quote, that in the long run, there's no misalignment between customer value and shareholder value. If you can deliver the best customer experience on every single parameter that matters, on price, on usability, et cetera, then ultimately your company will have the greatest enterprise value. And I think that's why companies like DraftKings and Flutter have seen their stocks decline by 50% in the last year, or more. And it's really because consumers are waking up to the fact that there is this alternative that exists that is far better for them in all the ways that matter. So to use the example that he mentioned, when you have an open marketplace, we're basically doing to sports betting what Uber did to rideshare, or what eBay did to e-commerce, Airbnb to hospitality. When you open up the floodgates and allow anyone to price a market, you will get basically strictly better prices than in a closed environment where you have basically a monopoly on being the counterparty, which is why it's called the house, right? The house always wins. They have the ability to limit you or ban you if you're beating them too much. And so, yeah, if you want to bet $100 or trade $100 on the Knicks to win the championship next year, there's basically a 0% chance that DraftKings is able to give you the best price. They're far sharper people, whether it's because they're sharper or because they're hedging some other risk that they've already had on the other side of the market, or maybe they're just uninformed. For whatever reason, there's someone out there that will give you a better price, sometimes a far better price than what DraftKings will give you. And so that's why I said it doesn't matter if it's Citadel or Joe Schmo. Like if you had two options, trade $100 to win $1,200 on DraftKings, or trade $100 to win $1,500, but you don't know who that counterparty is. Obviously, you're choosing the second option, right? It doesn't matter that who's on the other side of that trade. When you're buying shares of Apple, you don't care who's selling those shares of Apple to you. I mean, like, you can make theoretical arguments about, like, the concentration of liquidity, and if you have certain market makers that are doing too much volume. And I think there's a lot of critique that ought to be made in the prediction market space. I mean, I frankly have made some of those arguments. I think certain platforms like Rathera and like others are trying to create as unlevel of a playing field as possible while still being regulated as a prediction market. DraftKings Predicts is doing that as well, where they're trying to restrict who can market make on their platform to 1 to 3 groups, let's say. And if you do that, then it is functionally more similar to a sports book, right? To be a peer-to-peer platform, you have to let anyone be on the other side of the counter to be providing liquidity to the platform. And if you're restricting that, then there is this gray area between an open exchange and a closed exchange. So there are critiques to be made. Of course, DraftKings is not the one that should be making them, given how they're playing both sides in this. So there's also, I think, just too much debate around semantics in this space. Like, people talk about what is peer-to-peer, what is trading, what is betting, what is gambling. Like, ultimately, it's that there are these two products that exist, these two regulatory frameworks that are trying to govern sports event contract trading. And one is basically better in every single way. It's better for regulators, it's better for the leagues, it's better for integrity, it's better for trust, it's better for consumer protection, it's better for price, it's better for hedging purposes. And on the other hand, you have one that's basically a casino game that's trying to extract as much money as possible from the users that lose as much money as possible. When I started the company, the first sports betting conference I went to, it blew my mind that these executives talked so brazenly about how they're trying to milk as much money out of VIPs, out of losing bettors as possible. Send them push notifications when they're likely drunk at a bar, and very personalized, promotional content. And it felt so predatory. And then, they would pay this lip service to responsible trading or consumer protection. But like, the elephant in the room was, these are casinos. They make money by trying to extract as much money out of you as possible. And so it's just a little disingenuous when they say, oh, well, these markets aren't truly peer-to-peer. The other point I made in that Twitter post is that just because the market is facilitated by market makers doesn't necessarily mean it's not peer-to-peer. I mean, that's more of maybe like a in the weeds type of point, but peer-to-peer doesn't necessarily mean that your counterparty has to be a Joe Schmo on the other side.
Sure.
It's like, this is a a lot of these parties are very sophisticated that are trading algorithmically, that are helping facilitate these markets so that they function smoothly. And so just because your literal counterparty happens to be a market maker doesn't necessarily mean that it's not peer-to-peer, because ultimately what peer-to-peer means is that anyone can be either on the buy side or the sell side, right? The same way Airbnb, you can be or StubHub or whatever, you can be a seller or a buyer. And that's like ultimately what it comes down to. I think people spend way too much time on these semantics. What it comes down to is, can anyone be a seller? If you can just be a buyer, then you're a sports book. But if anyone can be a seller, then it is peer-to-peer. And that's a point that I think Jason Robbins intentionally leaves out, because like the writing's on the wall. I think they understand that. I mean, and it's not to say I think they're going to zero necessarily. I mean, they built it, but they're a marketing company at the end of the day, right? They're trying to build an exchange now, but they're not a tech company. They're a marketing company. They're a casino. They've built a great brand. They've built a great, fly trap, so to speak. But that's just not what will define the next generation of sports trading.
Jacob, at the beginning of this conversation, we were touching on this, but the latest raise was a $75 million Series B at a $500 million valuation. And now I want to ask, what's next? What do you have to take over the rest of the space? What's coming up now that you guys are live nationwide? How is Novig going to take over?
Well, I think our growth will continue to be product-led. With that said, I think we are going to be much more aggressive when it comes to user acquisition, brand awareness. We really haven't spent any significant amount of money on general brand awareness. Our marketing efforts have been really focused on bottom of funnel, mid funnel spend, and I think this next chapter will be defined by more aggressive brand marketing. I can't share exactly what we have planned, but I'd say in the next 2 months, I'd be surprised if any sports fan didn't know who Novig was. And so, I think we have a very clear plan of execution from day one. I think I really understood the sequencing of growing the platform, growing the company, and you don't want to start too early with brand marketing. I think it's more important you have product market fit, things are growing organically, you have a concept of LTV to CAC, and really it's about building this engine that is as operationally efficient as possible, and that has the product as full feature and market parity with our competitors. And I think we're now at the point where we have a product that we're very confident, and a team that we can really pour fuel on the fire. So, I think we'll continue to grow. We'll continue to raise more money. We want to be, by the end of football season, the no-brainer prediction market for any real sports fan to trade on. And, I'm confident we'll get there.
So when you're ready to announce that, and then the Series C, I hope you're breaking it on the fourth quarter.
Yeah, we'll see.
Jacob, thanks for coming on, my man.
Yeah, thank you so much for having me.
We're looking forward to the next one already.
Yeah, we'll come back whenever.
There we go.
Excited to continue the conversation.
Awesome. So next up, we have Nikhil Panu, SVP of Growth at Novig. Nikhil and we met 2.5 years ago at a Tech Week event here in the city. And then a few months ago, Nikhil, I got a LinkedIn message from you saying, love what you guys are building. We should chat for coffee. Caught up, and now Novig is the fourth quarter's official prediction markets partner, an exclusive prediction markets partner. So we're excited to sit down with you, man. Thank you for coming on. Tell the people what you're focused on as the SVP of Growth now at Novig.
Yeah, first of all, very excited to be on. Been a big fan of you guys for a long time, and so excited to see this come together. In my role, there's quite a bit. Basically, my primary focus is establishing and optimizing all of our distribution channels, basically anything that drives growth to the Novig platform, whether that be user acquisition, brand awareness, brand affinity, trading volume, user engagement. And that takes the form of like strategic partnerships, performance marketing, creators, affiliates, AEO, SEO, kind of the whole gambit. But historically, I spent a lot of my time establishing our user acquisition engine. This year, and especially with our nationwide launch, I'm very focused on increasing our brand visibility, awareness, and really turning Novig into a household name. We've been able to grow substantially with very little visibility, and excited to kind of invest more on the brand side to make us a bigger name. So,
how big's your team now on the growth side?
On the growth side, we have about 8 people working with us, both
awesome.
again here in house and externally. The broader marketing team's also been expanding. We have our product marketing team and performance marketing team, growth team. So the marketing team's been expanding pretty substantially over the past few months.
Love it.
Awesome. I mean, there's also a pretty cool job opportunity at Novig, head of social, right?
There is.
So that'll be a big one.
There is. No, yeah, we're excited. I think our social channels have been very strong, and as it's such an important, it's the front page for your brand in many ways.
Absolutely.
And like I said, as we invest more in our brand, we want our socials to scale with it too. So we're very excited to both editorialize our content and then scale our social team. So very pumped for that. If you're a social media wizard or and you spend a lot of time in sports media and content, we'd love to have you.
We
So.
definitely have a lot of people that would be good candidates for that. So you might be seeing some in your inbox. Nikhil, so before we go into the plethora of partnership stuff that has been breaking headlines for you guys, I want to touch on us in particular for a second. Why did the fourth quarter make sense for you? Why was it an interesting opportunity to partner? How do you see this partnership growing from your POV?
Totally. Well, I saw one Professor Paramanu clip, and I'm like, I had to do this. No, I think generally, how I approach partnerships, it's like it's all people driven first. As you mentioned, Sid, like we met a couple years ago, and I think we really hit it off. And what I love most, there's multiple factors. I think sports business doesn't really get covered the way it should be. Technology in sports as well. I think there's a lot of like aggregators out there, but not many people who actually do the work and analysis and really go deep with it. And I think you guys are very well educated in the space, and even this, like specifically with prediction markets, you know it very well too. And so I think it made a lot of sense for us to be able to work together. We also want to align with like emerging and leading sports brands and properties, and for us to be able to come together and partner and also like grow together, I think was a really exciting initiative. So, what the work you're doing to demystify prediction markets, we want to be there to help. We
Absolutely.
think, there's a lot of preconceived notions around it. And so the more education we can put out there, the better. So it was a no-brainer for us. And again, you guys have done an incredible job, and we're very excited to partner.
That means a lot, man. And for us too, as we've been partnering and working together already in the few weeks that we've done so, it's been evidently clear that we made the right choice in picking a partner that can grow with us, because, we didn't want to get funneled off to people that weren't really running the ship at some other larger institutions. And with you guys, we feel very, intimate that we know you sat down with Jacob, know the leadership. Like, it's not just some middle management that we got pushed to, right? So like, I think that means a lot.
And we've already been getting inbound of
Interest towards you guys
so.
and introductions to you guys. So hopefully we've made some, and there will be more coming your guys' way. So
Totally. Like I said, we want to be like, it's the people first, and you guys have been incredible. So excited to keep building on that.
love it. Suraj has been itching to ask you this question, but Suraj, you have to talk about the Mets deal.
Oh yeah, absolutely. So that's, I would say, elephant in the room, probably one of the coolest partnerships that we've seen, because I know that Jacob's had a relationship with the Mets. His, both of his grandfathers on both sides of the family were big supporters of the Mets, and getting a big deal with also, I would say, the city of sports is amazing, especially so early on in, the lifespan of Novig. How did that deal end up happening, and how are you seeing partnerships overall as a way to institutionalize the Novig brand across all of America?
Totally. Like the conversations with the Mets initially, as Jacob probably mentioned, it started with, he was connected with executive team members there. There was a mutual interest in working together. And obviously, like, Jacob's a massive Mets fan. We have a lot of Mets fans at this office. So, and for us to be able to work with a premier brand here in New York in our backyard, I think made a ton of sense for us. But from that point, there was a lot of conversations with, their leadership team to figure out how they envision a partnership like this coming to life. The Mets were incredibly innovative, and we both saw very eye to eye on how can we improve and enhance the fan experience in creative ways. How do we activate a partnership like this in ways that haven't been done before? And so they were very open to working with us to think creatively and strategically. And I think that made it very, we were very aligned from that front. I think in addition, they loved the fact that we were just focused on sports. I think that resonated with them in a big way. I think it's a little bit less controversial, but also it's like truly focused on optimizing the sports experience. And I think that resonated with their team as well. In addition, in this process, we also became an authorized prediction market partner with the MLB, which is also, pretty awesome for our brand.
Nikhil,
And
you
kind of
can't
where
hear
we are.
you can't hear the sound effects that are going on. You'll hear it after when we put it out. But yeah, this is everything you're saying. We got some nice
producer Bob is throwing out the air horns.
I love it. I love it. No, yeah, but even being an authorized partner of one of the big four like leagues, I think just shows how far we've come as a brand. And ultimately, we want to align with all the leagues and be a trusted partner, show why we're a little bit different. And we want to be at the table to help, whether it comes to integrity protocols or shaping how prediction markets show up in sports for the future. From an to institutionalize all this, we want to be at the table with them. And so again, this is like a first step in that direction, and we're excited to continue activating.
Nikhil, when you think about growth now, partnership wise and institutionalizing, like from Suraj and I's point of view, analyst, POV, we think the next growth, you guys have already started this, but for Novig, a lot of the brand play now is institutionalizing with the leagues, the teams. Can the people expect more from Novig in terms of what you guys have on the partnership roadmap and strategic partnership roadmap?
Totally. Again, we want to align with like the best properties and partners in sports. I think that helps provide legitimacy to our brand that we spent a lot of time cultivating over the past, few years. But we want to align with the best in the space. And so absolutely over the next few months and going forward, we're definitely going to have many more partners that come to play. Some will be more brand oriented and aligning on that front. Some are more distribution oriented of how do we, get Novig and editorial content in publishers and become this like source of truth in sports. Like we're market driven, right? So it's the pulse on what sports fans actually believe. How do we integrate that in places that sports fans are consuming content? So we have a lot of things in the pipeline. Very excited for those things to come to fruition. But yeah, I think aligning with the right partners is very important to us too.
Yep. Well, Nikhil, we talked about this once before, but obviously Novig is building America's #1 sports-focused prediction market. And right now the product is very sports game oriented. So mostly traders are exiting positions in and out of games primarily. But when you think about the growth of the product itself and markets that Novig can offer as a platform, can people expect to see more finance, business markets adjacent to the sports space? How far, if not, how far away is that? Is that ever going to happen? If so, is it going to happen soon? Like, how are you thinking about all of that?
Totally. There are infinite possibilities here. I think our primary focus today is to deliver the best possible sports experience. And so I think we're just like laser focused on that.
Sure.
We know that that's our bread and butter. We know that's our like biggest strength. And so I think early days, it's how do we offer the most comprehensive set of markets in sports? What are some unique markets within sports that we can offer that others can't? How do we deliver the experience that, the traditional sports bettor would appreciate, the new age sports trader, what they would appreciate.
Sure.
And so I think we're like at this current moment, we're so laser focused on that. And there's so many different directions that we can go within sports too, that are fun, that are, kind of newsier, that are a little bit more like, fantasy markets. Like there's a bunch of other like cool things that we can do. But I think again, laser focus on sports. And we've done that. I think with this national launch, we've drastically improved our live trading experience. We have a deep set of player prop markets. We're continuously looking for ways to add more leagues and events and games. We have parlays that people love as well. So again, we're very excited for what's to come, but laser focused in sports today.
What does the behind the scenes look like when you're expanding to new markets? So like, I know that you guys just launched obviously nationwide with your own prediction market. But like there's things like NHL and Premier League that aren't on that you can trade on Novig today. How do you get into those markets and what does that process look like? Do you have to work with them, directly, or do you just have to bring market makers or some form of liquidity to some of these different leagues? How does that work?
So we do actually offer like NHL and Premier League. I think some markets you may not see today because the seasons aren't active at the moment, but we will obviously have all the major leagues for you to trade on. if we're thinking about a net new market, there are a few things that come into play. I think initially it's data, like what is our data source for both market creation and for market settlement. So that's like one big component. I think in order for us to like we could theoretically spin up like a custom markets and create contracts around different things, but the next step is to deliver a product experience that is catered to that. So not every sport or league or market it's not apples to apples across the board. So
Sure.
there is a product and engineering lift of how does this particular league need to show up within the app? For ahead of the World Cup, we launched like 3-way money lines for soccer, right? And so like little things like that for the different leagues that we add, those are all considerations. The other part is like liquidity, right? If it's like a net new sport that we don't have, our existing traders maybe haven't had the propensity to trade on, there is a sort of liquidity provider component and ensuring that when people do come on and want to start trading, that those markets are priced and they have like a really positive experience with it. And then lastly, it's like distribution. It's like, how do we get this in front of the right fans who love that particular sport or that particular market? So those are kind of the steps, kind of the checklist in mind. And then, the just regulatory compliance stuff afterwards too.
Man, we're very excited to see all of the growth, and both on the product side and the business side and the partnership side, to see how Novig grows. And Suraj, we're definitely itching for sports business markets. So whenever those come out, we'll be active for sure on that front. Nikhil, thanks for coming on, man.
Of course. Thanks for having me.
Excited for the next one and all the overlap we'll have with Novig.
Pumped. Appreciate you guys.
Love it.